following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the August 15th magnificent Monday edition of today's Trader's Edge. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go look at the circumstance of these markets, what the buyers and the sellers, what the bulls and the bears are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to pick up that phone. Now it's not too early. 877-927-6648. Of course, internationally, 727-445-1044. Would love to hear from you no matter where you are at. So let's go ahead and get this show started on Magical and Magnificent Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we have the Dow trading up 75 points. He's trading at 18,652. S&P's up about 9 points, trading at 2192. NASDAQ Composite up 35. She's trading at 5267. Russell 2000 up 13 points, trading at 1242. The DAX closed up 25 points. The FTSE up 25 as well. Gold's up about $4 at 1347. Silver's up 13 cents. She's trading at 1984. Light sweet crude up $1.10, trading out at 45.59. Leading the charge here to the upside. Another nice day for Acacia Communications, up nearly $9. That's a little over 9%. Providence and Worcestershire sauce. Actually, it says Worcester. Well, we'll go with Worcestershire. That's up 51%. Maybe that is a IPO. I don't know. You got Twilio. Is that how you pronounce it? Twilio. Mitch in the den is in that stock. So congratulations to you, Mitch. This is trading at $62 right now. He had a question with regard to, what could be used for a stop inside of Twilio. Now, this is an IPO, folks. So if we take this back here, the problem is that this IPO'd out here on June 23rd. So from June 23rd through August 15th, this has gone from as low as $23.66 to $62 out here. So this thing is a little rocket ship. Volume behind the move. Let me turn on the volume out here. Nothing really that we can benchmark it against, but volume today, nice volume in it, about 10.1 million shares. And so what I suggested to Mitch is a couple, because he was looking to put in a stop. So what I like to do is take a look at what's called the average true range. Now, the question is for what period of time? I like to use the last 2 weeks worth of trading sessions to figure out what the average movement from high to low is. In the case of this equity, I believe it was, what did I put in here? $2.93. So $2.93 has been the average daily movement. Now, that excludes today's activity because today's not done with. And then I just simply suggest using some type of Fibonacci expansion of the average true range. Multiply that 293 times 1.272 or 1.618, and simply go ahead and tuck that stop below the actual close of the session. It hasn't closed yet, but, Mitch, consider doing that. There's really no TAS market profile data that we have out here. With regard to, any kind of other support volume-wise, it would really probably be this candle session here from June 30th, the high of which is 41.89. So I believe that is going to be well below wherever you're looking to put a stop. This happens to be the 30-minute chart here for this equity. And there's just not anything on this. 53.19, Mitch, would be where the top of your 30-minute TAS market profile will be, or 52.40. So it's not that far away from the 54.75 that you've got. I just don't have any other really good advice to give you on an IPO like this. Some type of trailing stop, though, is what makes sense. There's not anything bearish that is listed on this equity. That is for sure. We could say there's an A to B equals CD, but there is, and that's really nothing more, right, than it's an excellent, when I say nothing more, it's an excellent price measurement tool. I was going to try to put this on. I'm going to try to do that again here. Put in our A and our B and our C point out here. So I don't know why that's not working. Well, Mitch, I'm sorry about that. Maybe I'll try that during the break. That is weird. I've seen that happen a couple of times, and why it's happening right now, I don't know. So that is on Twilio. Also moving to the upside, we've got Baidu up $6, Telend SA up 26%. That's a nice move. To the downside, it's Priceline. That is the dollar leader, off about 0.75%, down nearly $11. You've got Mid-America APT apartment community, I suppose. That's down $5.50, down 5.5% as well. Amazon is down 3. Salesforce.com is down a couple. So nothing really huge and large to the downside out here. Okay, so what are the markets doing? It's a really interesting day in the markets with them trading higher. Now, when I say interesting, for a number of reasons. Now, if we take a look at the where do we want to start here? Let's take a look at the S&P 500 out here. And if we take a look at the bottom, the low that came in, the most recent low, which was the June 27th level, we can see that today the S&P 500 has made it to wave number 7. Now, won't be confirmed until tomorrow, meaning tomorrow would have to have a lower high, so this can't continue on. But it does get to a stage where you can, doesn't always work, but you certainly can see the most significant tops and bottoms that are put in. You, for those of you that have been listening in on the show for a long time, you know that to be the case. Well, I'm sure we're going to take a look at several of those during the hour today on different instruments that we take a look at. So you want to take notice. So the S&P up at new all-time highs, but in doing so, and it doesn't have to be wave number 7. It may just simply be wave number 3 that it's in out here. But it is something to pay attention to because we're starting to see a number of these waves in many instruments. For example, if we take a look at the NQ out here, here is the daily chart for the NQ. You can see that coming off that same bottom out here on June 27th, it too is in wave number 7. Now, there's an A to B. Now, here, the last time that there was a 7th wave out here was back on April 19th when it made a high out here, went ahead and made a nice retracement, about a 56% retracement into that June low. Made an A to B equals CD to the downside. It made a Gartley buy. It did all of the above. Now, there is the ultimate pattern that a Gartley buy or sell turns into is a fresh new A to B equals CD. Well, in this case here, that's what we're looking at on my screen. Now, that says that the NQ, this is a futures contract, equity futures contract. It has a price projection of 48.98. So just because we're in wave 7 now doesn't mean that it's going to stay that way. It could last for many days to come. So 48.98, but we are in that stage where it is kind of interesting. If we take a look at the Russell 2000, the Russell 2000 has been long and strong today. That's up, 12.5 points out here as we speak right now. Guess what? It too happens to be in wave number 7 out here. But yet it still looks very bullish as we speak right now. But it is a sign of caution. So speaking of caution, we'll go take a look at some caution. The only sign of caution, really, I think that exists. Well, you've got those 7th wave moves out there on daily charts. Many times they mean something. But we'll go take a look at the only other real caution sign that exists right now. This is Steve Rhodes with TFNN. That way we know what to be looking for. We'll be right back, folks. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 75. S&P is up 8. The second request that came in, I said I was going to go do one thing. I'll do that first, and we'll go to the second request, which was to take a look at platinum. Because I said, hey, there's one thing that we want to pay attention to. So everything looks blue skies and rosy. Well, sort of. And the sort of is this. It's the VIX index today. Now, if you're watching this on TigerTV, and I do hope that you are, the top portion of my screen, the top panel, is the S&P 500. It's it's highlighted by a red line. A line chart means what? Line chart means that we're only taking a look at the closing session. So right now we know that the S&P is trading at 2192.53. So we've eliminated the high, the low, and the open. We're just taking a look at the closeout here. Now, with respect to the VIX index, that's especially important out here, or at least I have found from a pattern standpoint, something that we want to pay attention to. There's other tools, obviously, but this one here, if you're watching us, you can see that on the top portion of my screen, I have some green lines. Let's just start over to the left-hand side. That way you'll get a chance to see what I'm looking at. So back around September 1st of 2015, you had the S&P close at about 1913.85. Then what happened was on the trading session of September 28th, the close was 1881. So we had a lower closing low. Likewise, if we go take a look, and here's where, if we take a look at the VIX index, by the way, the VIX index on that same day of September 1st closed at 3140. Now, 3140, just for all those folks that say, you know, complacency and this and that and the other stuff, would you think that 3140, you'd say, hey, there's no complacency there, and that, you know, my good, that the market could only do one thing, which would be go down, right? This is where the numbers don't really tell the story. But the point is, I want to go back to that story. The point is that when the S&P was making a lower low on September 28th, so too was the VIX, because the VIX closed out at 2763. You see, that's a kind of divergence that says, you know, that low that was just put in, don't buy into it, especially if you see a turn to the upside inside the S&P 500. That is one of the things, one of the tools, there are many of them, that marked a bottom out there back in September of 2015. We had another instance of a similar type move where the S&P made a lower low between December 11th, 2015, where the S&P was at 2012.37 and the VIX index was at 24.39. And then just a few trading sessions later, December 18th, you saw a lower closing low in the S&P 500, but voila, so too did you see in the VIX. Therefore, you've got that green diagonal line to the downside. Those are the types of divergences that you pay attention to. Now, just as it works to identify bottoms, here's the beauty of it, so too does it benefit us by being able to identify tops. So fast forward to where we're at today, and if we take a look at the most recent high out here that I'm looking at, that's correlated with the VIX index, I'm going back to August the 5th. Now, the close on August the 5th of the VIX index, 1139. Right now, we're trading at 1175. That's right. We have a higher low. In fact, if we just simply go to just a few days ago, August 12th, that number was 1155. So, again, we're seeing successive higher lows inside of the VIX index, where we're also seeing successive higher highs inside of the S&P 500. Now, can this pattern resolve itself and say it's nothing to pay attention to? And the answer is obviously yes. What needs to happen? You need to see the VIX index close below the low of August 5th. Now, it could do that this afternoon. And if we did see it close below 1139, this pattern that I'm sharing with you right now was nothing more than a waste of 3 minutes of your time. But it wasn't really a waste, because what you now have is a pattern to pay attention to that you can absolutely correlate to what's going on inside the S&P 500 to say, aha, something is not right in River City. Now, by the way, just so we can just simply throw out the whole idea that it makes a hill of beans whether or not the VIX is trading at 1175 or whether it's trading at 2094, as it was on October the 2nd. Because at 2094, which would be twice basically of where it's trading right now, most people would have you believe that that would mean that the market's going to go down because we have a high VIX. Folks, just pay attention to the yellow line. That is the follow the yellow brick road line on Stevie's VIX chart out here, because that's the 50-day exponential moving average. That's the yellow brick road that you want to pay attention to. Because especially when the VIX is coming from a higher high and it closes below that 50-day exponential moving average, if you are short, it's telling you don't be. It's telling you that the market is reversing. And just take a look at how the VIX continued to close below that level and the market went higher. So don't pay attention to the number. Instead, pay attention to the patterns. At least that's what Stevie believes out here that you should do. Now, let's go take a look at platinum for Danny. So that's the only thing in the well, I can't say the only thing. It's one of the things that when you start to see the seventh wave moves, when you start to see price moving higher with less relative energy, such as the Dow daily chart out here, the Dow daily chart moving higher today, nice move out here, but doing so with less relative energy out there. You put all those things together, and it does say, look, folks, I like the Wizard of Oz too, but you've got to be real out here. And the markets, I will not be surprised if today is not the high of the market, the high of the market for a period of time to come. Now, to platinum, let's take a look at platinum. Same patterns out here, right? If we take a look at platinum, this is for Danny in Atlanta. I'm going to put up the continuous contract if that is okay with you, Danny. And what we can see here, as price was moving higher back on August 10th, when the bears finally showed up on August the 11th, it was a nice bear sash candle. That marked a top out here. That marked a high. Danny is flat in this trade. I'm not sure what Danny is looking for as far as information, but what I can share with you is that the platinum contract has given us a topping signal out here, just as it did. And look, there's some other topping signals out here, but we never saw any type of bearish reverse signals. And in this case, we can see that price is trading below Stevie's red line. That is important. Just like the bullish signal that took place right back here on January 22nd, when price was moving lower in platinum, doing it with less relative energy. And then you had the bulls show up. That was on January 22nd. They posted a 2-day bullish reversal signal, the bullish engulfing in a 3-day, the Morningstar pattern out there. And that's what cemented the most recent bottom inside of platinum. Now you've got a topping formation that's in there. What else can we glean from platinum? Well, if we go take a look at our daily and weekly market profiles out here, this would say platinum right now today trading below both its daily bottom of the box and weekly top of the box. Now, taking a look at these profiles, what we can glean from this is that platinum is on its way down to 1078.30 or 1054.10 as the next stage of its move to the downside. So again, same patterns just simply a different vehicle. The patterns are agnostic to the vehicles. Whenever something moves higher, does with less relative energy, all we do is wait for the cavalry to arrive, and they're going to go ahead and generate for us the signals to either take or not take a trade out there that tells us that there is a directional change in trend that is underway, just as there is inside of platinum. Somebody had posted, Duffy was asked the question, has TLT peaked out here? And Duffy, I will give you my 2 cents worth for whatever it's worth. And guess what? It has given us a potential topping signal. Now, depends what time frame you're looking at. But take a look at what the 30-year Treasury has done here on a monthly basis. It has formed wave number 7. It has moved higher with less relative energy. I'll report back to you on August 31st if this is a top or not. But as we speak right now, if today was the close of the month, the answer to your question, Duffy, would be yes, there is a top in place inside the TLT. Steve Rhodes with TFNN.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 78, S&P is up 9. Let's go to one of our favorite people here at TFNN Insider Tigers Den. That is John in Philly. John, thanks for calling. Thanks for holding. How are you doing this afternoon?
Steve, I'm doing very, very well. Thanks for taking the call.
Hey, my pleasure as always. You have a nice weekend?
Fabulous weekend. Midwestern weather in August is just fabulous.
That is terrific. Glad to hear it. Now, you are the bond king. We have to. You're many kings, but we're going to give you the bond king as one of them. And you're calling about the September contract for the 30-year Treasury, which you have been trading very successfully, I might add. And how can I be of assistance? And by the way, congrats on all the trading there.
Hey, I appreciate that. Steve, I was calling just a segue to what you had just gone through.
Yes.
For your audience, and you showed the monthly bond futures chart. Just to complement that, I wanted to ask if you could pull up the monthly chart on the ETF for the very similar instrument, namely TLT is the ticker symbol. Okay. And if you can bring that up, I asked the question, does your wave count, does it show the very same phenomena, or is it different?
So let's try to take a look at that. It's going to take me just a moment to do that. That's the TLT that John is talking about. And so he wants to do a similar type wave count on the monthly chart. Now, we're taking a look at the wave count on this began, give me a moment here. I want to make sure that we do everything exact. Back on December, this is the month of December, back in 2013. So let me make sure we're back in December of 2013 out here, just as the example. So we got 2010, we got 2011. 2013. Okay, here we go. So on the monthly chart for the TLT, the answer is no, it does not tie into that at all. In fact, this would just give us a fifth wave to the upside. At least I think that's what. Let me just give me a second here. And have you looked at it in detail by any chance to see what you've got?
I appreciate you sharing. The answer is kind of.
Kind of, okay.
The fact that you don't get the similar wave counts with instruments that should be quite similar touches on something I want to highlight for you and
Absolutely.
Your listeners. So here it is. When you're performing the analysis, as you're just doing on TLT, which is an ETF, I believe it's the Lehman 20-year U.S. Treasury ETF.
Yes.
Or when you're doing your analysis on the 30-year bond yield. And, of course, Basel does this regularly, as we all recall. When you do it on the Treasury yield chart and this TLT chart, fine. I highlight for you a hazard that I want you to be aware of, that I've long been aware of myself in
Please.
the DB chart. Here it is. When you're doing your daily chart analysis, say the September futures or the
Yes.
DEES when those come up, that's fine. Go ahead and do your analysis without any concern that there's a hazard. But when you do the weekly and the monthly, here's the hazard. In the first quarter of 2015, the bond contract was changed.
Right.
And I won't go into the massive details explaining why. It's very complicated, math-based. But suffice it to say, you and I will all recall back in the early 2000s when Greenspan was still the Fed chair. And he was making the argument in front of Congress, hey, by the way, we're running a budget surplus. Remember the last few years of the 90s with the stock market booming, big capital gains taxes, there was actually a budget surplus by the U.S. government, and the U.S. Treasury, in response to that, stopped issuing the 30-year bond and said, we'll just do 10, 5, and 90-day paper, that sort of thing. And then the 30-year bond was reissued beginning, I believe it was 2011 or 12. That feature resulted in a situation,
a big gap, as I recall, in price on the charts, right?
In which you didn't have 30-year paper issued for 5 or 10 years, and hence the construction of that 30-year bond contract, dependent upon 30-year paper that's cash market based to be deliverable against those futures, ran into a glitch, a snafu. Now, everybody knew about in the trade, but the the key was the bond contract was reconstructed. So after, I think it was like January or March of 15, there was a new contract. And what I will tell you, when you string together the monthly and the weekly chart, you're talking apples to oranges. Or in effect, you're saying,
Sure.
oh, I was trading bonds, and then I threw on the soybean chart after that. So don't do any analysis on the monthly or the weekly bond chart where you're stringing those two together. They have nothing to do with each other.
Yeah, and the day, folks, that John is talking about, I believe, was back on February 25th or 26th out here when
Steve,
that
TigerTV
occurred.
chart shows that beautifully. That's exactly what we're referring to. Yeah.
Yeah.
So I appreciate you sharing the TLT, and that's the one I'd like to track myself to get a long-term view on the monthly and weekly Chapman wave or other wave structure conclusions.
Yeah, no, that's great, and I appreciate you calling in and sharing that. Now, in the case of the TLT, because it began trading in 2002, I think was the time frame. We don't have all of the same data points out here. But I'll definitely take a look at it. I can say this much, that right now with regard to the current month, inside the TLT, it too, as of July, was moving higher, doing it less relative strength. So at this stage right now, we do have a bearish reversal signal. It all depends on where the candle session closes out here. And these are just simply patterns to be paying attention to. If I just switch it over to the weekly, now that's the TLT again, and we see if there's any other patterns that are out here. Let's just see what kind of wave count we might have. The current wave count would put us into, on a weekly chart, wave number 5 out there. So, and right now it just shows
that's very
that.
helpful. Thanks so much.
Yeah, and it just shows that the TLT is just really trading with inside a range. Now, it's an important range because the bottom of which is 136.30 out there, and that's the bottom of its TAS box from a weekly perspective. That's an important level to be watching, because if it closes below that, then that's going to set off a larger retracement. And then the candle that I'd be watching from a weekly perspective for that additional confirmation. Because are you taking the trades to both sides, John, or just to the short side these days?
So as long as we're near that July 8th/11th high, as long as we're close, I'm focused exclusively on the short side.
Got it. Hey, John, thanks so much for calling. The price to be watching in the weekly candle would be the one from February 12, 2016. Any close below 135.25 would be another nice bearish signal for you. All right, my friend?
Steve, thanks so much.
You bet. That was John in Philly. Steve Rhodes with TFNN. We'll be right back, folks.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A share bull and bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed with TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's up 77. S&P is up 9 points. Now, I was away on Friday, and a couple questions that came in. One question came in from Larry in Detroit, and he was asking about the Gold Bugs Index, Larry, which is the HUI. That's different than the XAU. Both are tracking gold mining equities. The XAU is a Philadelphia Gold and Silver Index, whereas the HUI is the actual Gold Bugs Index traded on the ARCA exchange out here. Now the GDX, because you had questions, Larry, about those two instruments as well as the GDX out here. So the GDX, the underlying instrument, is the HUI, and so that's what I have up on my screen now. You had some fairly detailed questions as well, but that was one thing, just to clarify it. And you were asking questions about, long or short, or what is the message of this chart out here. So here's what we know right now about the GDX, which is trading at about $30.91. We know that in this instrument, it has been fairly stretched. Now, it's been trading higher with less relative energy. It began that trade most recently back here on August 3rd. I'll go ahead and blow this up on my screen out here, make it a little bit easier for you. I know I don't have any market profiles. We'll switch to a different chart in order to go ahead and give you that. So it was moving higher, doing less relative energy on August 3rd. And then on the trading session here of August 4th, it gapped down. Now, that is a bearish reversal signal. But when it gapped down, what it also did was it ran right into the support line, and that's Stevie's red line out there. And as long as price stays above that red line, what that communicates to me in an instant, it tells me that the price oscillator is rising. You say, what's the price oscillator? It is the difference. It's no different than any other oscillator that you use in so many different things. In stock charting, it measures the difference in energy between two moving averages, two exponential moving averages in this case out here. And measuring that is helpful in identifying for us perhaps what side of the trade one should be on, or at least when the market has made a turn. So you don't want to misread the signals. In this case here, you'd see the gap down. You'd say, aha, there it is. It's time to go short the GDX. But the reality is price ran right down into support. The next day, it went ahead and closed higher, pretty much closing that gap out here. We did have another gap to the downside. Remember, the GDX is also going to be trading with gold and silver. So really, when you're trading this, you have to be taking a look at in essence, the underlying instrument, even though it's not gold and silver specifically that control the GDX. We know that the GDX, or the Gold Bugs Index, is going to trade based on what's been transpiring in both gold and silver out here. So what is it that we know right now? What we know right now is the price oscillator inside the GDX is turned down. We know that because price has been traveling underneath Stevie's red line for the last 3 trading sessions. Right now, it's measured at 31.47 out here. Now, we know that that is what is in place. Now, let's go see if inside the GDX we can find where its levels of support are. And by doing that, we're going to take a look at, we've got another pattern that is out here. So what we have inside the GDX, we have a nice little rising price channel. We also have some horizontal lines of support. We don't have any horizontal lines of resistance because price is above all of those resistance lines. And what I'm specifically referring to is the TAS weekly profile. So in order to get short out here, you would want to at least see a close below 30.73 inside of the GDX. If it does that, then it's going to be called what we'll call getting back inside the range. The range of what? The range of the TAS market profiles. So if it gets below that, then it says, hey, it can go all the way back down to the bottom of the range. Well, interestingly enough, the bottom of the range of the weekly profile would take it near the rising price channel out here, which should be ultimately a level of support. If it breaks through that, then that would indicate that you have a change in trend. So where is it that the GDX is going to travel to? Well, if it closes below 30.73, then the next mark to take a look at is going to be the 29.12 to 29.01 area. If it breaks through 29.01, then you're looking at about 28.28 to 27.86. So you've got some signals out here. I hope that answered your question about some of the different terminology that we use here at TFNN. But the HUI is the indice that the GDX is trying to replicate, although it's not going to replicate it exactly because I don't know what's inside the GDX from the standpoint of how much money they've got towards cash and expenses and things along those lines. But it basically is the ETF that is replicating that versus the XAU. And maybe somebody in the den knows, is there an ETF that tracks specifically the XAU out there? And I don't know if that's the answer. But, Larry, I hope that helps answer your question. As long as I'm in questions from our listeners out here, this is Bill wants to, again, take a look at the IBB. So let's go ahead and put that up on our chart out here. And then we're going to go to Frank from Gloucester, who wants to take a look at the GGP as a short, or maybe he is short. But we're going to go take a look at it and see what it's doing. Now, in the case of the IBB, Bill, this is trading higher today, a bit higher, 591,000 shares out here. It's trading just slightly above its daily point of control level. That's at 294.79, so watch where that closes at. But your best place to short it says, what is resistance and support? Thanks. The best place to short it from right now is going to be the top of its daily box. Let me just blow this up on our screen. By the way, the top of the daily is 299.49. The top of the weekly is 302.33. Now, the reason why that's going to be a good place for you to short it from or consider shorting it is because of the most recent swing point high, which was August 4th. Now, that swing point, which is traded from 295.42, so we are inside of that swing point right now. So that's a beauty to give you some information. That swing point has 964,000 shares, and you are at 592. Let me see if I do the instant math on this. Let me get that spreadsheet out, see where we might be at. So we are at about 592. We've been trading for, 4 hours and a quarter, we'll say. That says volume today. Did I do it right? No, I didn't. How did I do that? Give me a moment here to actually do this correctly. 592, got to put in the right square. 905. So volume today, straight line math says you're about 905, pushing into 964. So you're pushing into that level with volume. So, Bill, that would say to me the IBB is likely going to go test that swing point high. And that swing point high is 299.49. So you want to see it get above that, do it with less volume, close back below 299.49, and that right there could end up being your short. But if it's pushing, if it can clear that, then watch the price level of 302.33. That is the IBB. I think that takes care of all of the email questions out there, but I'll check during our next break. In the meantime, we've got Frank from Gloucester. He wants to take a look at ticker symbol GGP out here. GGP is General Growth Properties. And so I don't know if you are short, looking to get short, it doesn't matter. Let's just simply go take a look at what the stock chart is communicating to both you and I. So we know this most recently made a high back on August 1st. That high was out at 32.10. Now, from the low that it made, which was back on May 19th, from that low to the high, We know that 0.382 retracement levels at 29.78. We're trading at 29.99 as we speak right now. Let me just hit the update on this real quickly. Maybe I've got all.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016, and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Sorry for that little tinty sound that we've got here, but I was knocked off the air for some reason, which also means that I am, you're not going to be able to see my charts, but I'll walk you through what it is that I'm looking at. So the timing couldn't be better because just about 4 minutes until our man David White comes on. But we were looking at the chart for GGP, which is General Growth Properties. And as we were going off the air, we were taking a look at the A to B equals CD to the downside that it is in the, which it has formed thus far. And it looks to me like, Frank, the levels that you want to be watching, because there is no bullish reversal sign on this. So this says that price is likely inside this equity on its way down to about 28.34. Now, 28.34 happens to be the .618 measurement from the low that we were looking at. That's back on May 19th, all the way to the high that was put in on August the 1st. Now, there is a brand new TAS market profile that formed today. That profile formed below the prior one, so that says that is a bias to the bears, change in trend that's in place. We're down below any of the, I take it back. There's also a weekly profile that's been around for about the last, looks like 7, 8, 9 trading sessions out here. The bottom of that weekly profile is the number you want to watch, which is 29.80. When I got cut off the year, we were trading at 29.97. But the brand new daily that shows up, the bottom of its box is 29.53. So resistance should be 30.14. If, in fact, price moves about $30.14 or closes above that, is what I should say. If it closes above 30.14, then this is likely going to go test the most recent gap from August the 11th, and that's about the 30.50 level out here. Likewise, if price is able to close below both the weekly and the daily TAS market profile lows, again, the number that you're really keen in on is 29.53, then you're likely to see a move down to 28.34, maybe even all the way back to 27.32 and then 26.02, where the equity will do a 100% move of a move. Now, the nice thing is this thing had volume come out of it. That was on August the 11th, so volume is to the downside. There was about 8.5 million shares. Okay, folks, so as we take a look at these markets now, and it is very difficult to find anything that would be so-called bearish out here. But what we want to do is we want to understand when markets are moving higher or they're moving lower and it seems like they're not going to end, where are those signs that say, hey, the end is near? There's a detour sign. And those signs are when the primary sign is when price is moving higher, doing less relative energy out there. So we have a couple of those that are around inside the marketplace. And also we want to pay attention to that seventh inning stretch, that seventh wave session inside of the markets. We have plenty of those that are in place. For example, with regard to price moving higher, doing less energy, if you look at the 5-hour chart for the NQ, the 5-hour chart for the ES Mini, the 5-hour chart for the Dow, you would see that pattern is present. You'd see it on the daily chart for the Dow out here. So it is that combined with what we looked at when we began the show, which was a rising bottoms pattern inside of the VIX index. As long as that rising bottoms pattern is in, that is a signal that we're going to see a pullback. Is this like a top of significance? And my answer to you is no. These markets are going to move higher. That doesn't mean that we are that they're going to move higher forever. What this means is that I would expect a pullback to take place. We'd see it over the course of several days. Then we'd see the market rest and then move higher into September, and then probably a fairly good move down into the early stage of the election cycle, debate type area, middle of October. You know the type of bottom I'm looking for. So, folks, sorry about this last segment here, but stay tuned. Our man, David White, our polar bear, he'll be up next. Then we've got the Tom O'Brien Show from 3 to 5. Have a magical Monday. I'll see you on Turnaround Tuesday. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.